Points and fees. Understanding the costs of your mortgage rate. This is Ella Gurfinkel, Senior Loan Officer with Fairway Independent Mortgage and Team Ella. How do you really compare what the mortgage costs are, especially when you're looking at different mortgage offerings online? Probably my favorite topic of conversation with many a client on essentially a daily basis. When you go online and you look at the rates that are being offered, how do you know if it's real, first and foremost? And secondly, how do you know what the real cost is that's associated with getting that rate? Well, I'll let you in on a little secret. The secret is read the small print. Read the little asterisks, because usually when you look at the rates online, you will see a little asterisk there. Read what follows the asterisk. You know that little star? That's called an asterisk. Sorry, I'm being a smartass in my nature. When you look at the rates, really the bottom line is on whether it's worthwhile to pay the fees, to pay the extra points, to pay the extra cost of getting an interest rate lower translates into how long you plan to stay in the house. You can buy the rate down. I can't say that as low as you'd like, because that's simply not an option in today's regulatory environment. We're limited to how many points we can actually charge you to get a lower rate. But does it make sense? Yes, you can pay $20,000 to buy your rate down, by 1.5% perhaps in rate. But that maybe $500 difference in the payment versus the $20,000 spent upfront out of pocket. Do the math. Divide the $20K by 500. What do you get? That's how long in months you have to stay in the house to even start seeing the beginning of a break-even period. If we're talking here a few $100 to save 50 to 100 a month, great. It may be worthwhile. Again, does it fit your situation? But if we're talking thousands only to save a few hundred a month, and the break-even is more than a few years, and we know you're not going to be in the house that long, well, hell, if it were me, I would not just walk away, I would run. So how do you really understand the cost of the loan, the interest rate that you're getting? Always ask about the points. Always ask about the cost of the credit you're getting. One of the tricks of the trade I've learned is when you're looking at the rates quoted, especially if you're shopping online, which we'll have a whole other conversation about, because not everything that you see online is really worth pursuing. But if you are shopping online, or if you are comparing two legitimate or three legitimate offers from legitimate lending institutions, they should also be providing you with what's called an APR, annual percentage rate of your credit. While I'm not going to dive deep into the APR itself, because the feds have created that formula, that's lovely, for the sake of you being able to compare different rate offerings and different mortgage offerings, what I can tell you is that if the spread between the rate that you're being quoted and the APR is more than roughly 0.1%, you need to dig deeper into the costs that are driving that APR and rate spread up. The bigger the spread, the more you're looking at paying in points for that specific interest rate. And then you have to consider how long you're going to be in the house once again. Because if you're going to be in the house forever, it's your forever home and you know that for a fact, then maybe it's worthwhile to bite the bullet and actually pay the extra cost up front to get a lower rate. But also consider this, no interest rate is forever. No mortgage is forever. 99% of mortgages right now come without prepayment penalties, meaning you can refinance as soon as the interest rates go back down. And yes, the rates are cyclical. What goes up comes down, so the rates will eventually come down. I've seen it over and over in my very long career in the mortgage industry. So is it a question of paying points? That's something you can answer for yourself. But how do you compare rates? Look at the spread. The bigger the spread, the costlier the credit is to you. And then it's your decision on how you want to proceed. If you have a story to share about how you paid points or you considered paying points, please share below. I would love to hear the feedback and I would love to talk to you about it. Especially, I'm more curious to see if it really worked out for you in the long run. See you soon.